Well, and welcome to this live stream of the Dental Guys. I'm Wes, the Dental Guy.
And I'm John, the Dental Guy. And Wes, it seems like it's been a while since we've live streamed. And I think there's a pretty good reason for that. It's called craziness of going back to work. And I mean, people outside of dentistry, I know our guests are probably going to just laugh at this when they come on here in a minute, but I tell people, people outside of dentistry don't really understand how hard it can be when you're in dentistry, mentally and physically exhausting. That's just the dentistry. Okay. But then there's this whole owning a business and managing the business side that is in the background. Now, it's always in the background, Wes. It's been in the background since we were all business owners, if you are a business owner. But now it's less in the background. It's more in the forefront than it's maybe ever been in our whole careers. And this is a lot, Wes.
It definitely is more in the forefront than it ever has been. As I drink my daily pamplemousse. Right? I mean, because every day you come home and the mental exhaustion is right. And I know our guests, right? Chris and Justin, they work hard.
They're in the same kind of situation.
They work hard.
I mean, because they are also they're in a different situation because we have to put our energy into our patients. I mean, Wes, every patient that comes in the door, you have to be on your game like it's Disney World and it's the best day ever. Even if you think your business is about to go under, you have to be able to pour energy into that person. Now, Chris and Justin, they're also having to manage a business, but the interesting thing about them is they're getting to hear the reality of these dentists calling them in a panic. Like, what should I do? I'm about to lose my business, or I'm worried that I'm not going to have enough money to pay my bills. So their stress is a different kind of stress than ours, but it's equally challenging. And I'm interested as we bring them on to just hear a little bit about maybe what their last few weeks have been like before we get into the topic of the day, which is what you need to know about the financial side, the business side right now. I'd love to hear
back to the Dental Guys live stream. Chris Mahan and Justin Goodbread. This is a financial update today, but we want to hear a day in the life of Chris and Justin. What's been going on, guys? What's been going on,
guys?
How's
it been?
Yeah. Justin?
Do you know that the artist DMX who sang this song, "Y'all Gonna Make Me Lose My Mind" up in here? That's literally been my motto. I feel like between that and Groundhog Day, Bill Murray wanted to punch Ned Flanders, the insurance salesman, I think it was named Ned, in the face every time I walked out. It's like, it's been like Groundhog Day for like the last 120 days. And as you were talking there, I got to tell you, John, Wes, I'm over here like playing my violin, like, welcome to the world of business, guys. This is what we deal with every day. I mean, this is nothing new, but you asked.
I know. I'm totally
Chris, I mean, are you different, Chris? I mean, I'm sure that you're over there eating bonbons on a regular basis, right?
Man, my job is to keep my game face on all the time, right? Yeah, man. It's kind of, you sit back and you watch, and, we had to be, had the best hypothesis of how it was going to go down as it was going. And both of us assisted a lot of clients in strategizing and getting their PPP funds. And I haven't heard a whole lot from them over the last couple of weeks because they've been, chairside, realizing a lot of that pent up demand and practices are really doing well, at least the ones I'm working with. And they haven't had any questions. But, I've been sitting back and, Justin, you and I have talked a lot offline as there's been significant changes going on all throughout, for the past, 2 to 4 weeks that we really haven't done any highlights on because it's only going to be changed again in the next 2 weeks,
So let's kind of get into that because,
and I just want to finish that thought by saying, so you're saying dentists they're stressing you out a little bit, but you're getting through it.
Getting through it. That's right.
That's good.
We're good.
That's good. I think that there's some interesting things. We talked about this in the pre-show, But I want to dive into PPP right now because we're all using that, right? I mean, I hope you're using it. We're using it weekly, if not bi-weekly. Utilities, we're using it for rent. We're also using it for interest payments, right, on our our loans for our real estate, if you own a building. And then on top of that, the main thing that you're using it for is your payroll. But tonight, there's some updates when it comes to how much money you can pay yourself, the owner. And even, John, you learned something about paying associates and how there might be an opportunity here to spread that out over 24 weeks. Let's talk a little bit about that, Justin. Let's dive into some of these updates and really kind of recap where we should be right now in utilizing the PPP.
Sure. Yeah. So we all know probably by this point that Congress unanimously passed a vote. The House did, and the Senate came along and passed a modification to the CARES Act. The president signed it. It's been about 2 weeks. Interestingly enough, right before that was passed, about a week beforehand, the SBA released their guidelines for forgiveness. And the Treasury Department and the SBA, about 2 days before that passage, actually gave us some interpretation for those guidelines for forgiveness. Just rip that part up. It's all out the window now. So the Congress passed a law updating the PPP. When there's a couple of major highlights. The first one is it extended the 8-week period to an optional 24-week. So you can now ask for forgiveness in an 8-week period or a 24-week. The SBA has now come out and clarified that there's not a 17-week, a 16-week forgiveness period. So it's 8 or 24. That was a pretty big deal. Another big deal is they dropped the payroll percentage from 75% of your loan balance had to go to payroll beforehand. They dropped that down to 60%. So they moved it from 75 back to 60. That leaves us 40% basically to cover the areas which fall outside of payroll. And then they clarified Article 1106B4 of the CARES Act, which basically clarified that the utilities now clarified are electricity, gas, water, transportation, telephone, or internet. So they put a lot of details into that particular point there. Another one which came up is that now we had to bring all of our employees back. Now they've extended that till the end of the year. So those are three major points. The one that is probably not going to be applicable based on the way the forgiveness document, which was released, I think it was a week ago now, roughly, a week ago Tuesday, actually. They moved the term of the loan from roughly an 18-month payment. So it was a 2-year. You got the first 6 months of it, no interest, and you could pay the balance out over a 2-year period. They pushed that to a 5-year period. But candidly, I don't believe the majority of small businesses are even going to deal with that. I really believe, based on the way they've done the updated forgiveness, that the majority of small businesses are going to get the loan forgiven in its entirety. I don't know, Chris, are you seeing the same thing from your side?
Yeah, that's what the wind currents are showing, is that they're looking for ways to really get this off the books of the banks and get these monies in the hands of small business and get it done. I don't think they're trying to find ways to ease up on the requirements on the FTE requirement. And they also, speaking of going from 75% to 60% has to be utilized for payroll. That was a cliff. So previously, if you use 74%, then boom, none of it was forgiven. Now it's not a cliff; it's all pro rata. So that's something that was very important there as well. They also increased. They also increased the amount for self-employed individuals, partners, sole proprietors, etc., from $15,385 to $20,833. So everybody got about $5,500 more to allot to owner compensation. And then one of the things that is powerful is your highly compensated employees. They were capped at the 100,000 as well previously at the 15,385, and that was based on 8 week 100,000 divided by 52 times 8. Now they're multiplying at 100,000 divided by 52 times 24, which comes out to 40,000 and change if you have that amount of discretionary funding. So it's really a case by case basis, and it all boils down to really what we've been searching for the entire time, because we started off with certain requirements and we'd go get PPP funds, and some clients got 401k and defined benefit and a lot of money front loaded, and then they came in a week later or 2 weeks later off for clarification, And so it depends on how much money you got, how much money you've spent, and it's really a case by case, in depth, strategy that really I employ everybody to look at, because there's a lot of different options now that that you can utilize. I saw another thing that came out and gave clarification, at least an opinion, that even home office, your mortgage that you're paying on your home office, if 10% of your house is your home office, 10% of your mortgage interest can be used with PPP funds, your internet for your home office, the utilities, et cetera, which is a small bit, but depending on those that may be creeping up on whether they can utilize it all, that may make some sense for them.
Justin and Chris, it seems like the more that we get into this, the more they want to forgive, right? And Justin, you talked a little bit about this before the show, is that forgiveness is key here, right? Because and it looks like that they've offered more latitude for forgiveness. Is that the case?
Yeah, so they've actually like I said, last Tuesday night, almost close to midnight, the SBA released Form 3508EZ and Form 3508. So basically, if you think about your 1040 tax return, in the old days before we made a lot of money, we could file the easy tax return. Now you have the SBA forgiveness application, EZ form. And if you look at the and rules, there's 3 boxes on the application that you can look at. Ultimately, the majority of small business owners are going to fall in this. I mean, one of the key things is as long as you don't decrease your employee's salary by 25% or greater. And that's the majority of small businesses. And then there's some exemptions inside there where if you're unable to hire back qualified employees because of CDC guidelines, which is directly affected the dentist world, then you're exempted once again. So it looks like they're freeing up the forgiveness capability. And we talked about it last time on the show. I know Chris kind of dealt with this a little bit last time we were on this as well. Go back to the spirit of the law. Right. I mean, lawyers get involved and they start muddying the waters. Accountants get involved and they try to clarify the waters sometimes. Unless, ultimately, what's the idea is get money out. And basically, if I candidly could say it, we put business owners in competition with the unemployment office, candidly, but we were able to keep people employed. And the last thing that the spirit of Washington in an election year is to penalize small business owners. Now, they do not want small business owners to get a windfall. And there's a lot of rules in here, like Chris was just talking about. They're capping us as small business owners at $20,000 and some change, $20,833, whereas you can pay your employees $46,154. So they just don't want us small business owners to have a windfall. But if you look at the spirit of the law, it is we want to give some money to keep people employed during this COVID situation, and we're going to do our best to forgive it. There's scuttlebutt out there that there's a number that's floating around. Chris actually mentioned it before the show. I heard a number slightly higher. It could be $150,000, $200,000, $250,000, that anything beneath that value is not in law yet. They haven't approved this yet, but it's scuttlebutt. They're just going to try to forgive that outright. We'll see. That's not the rules today. Today we have a forgiveness application that you would have to complete. But it looks like, Wes, to answer your question directly, it looks like they're doing their darndest in order to make it where we business owners can keep our employees employed without having to deal with this banking bureaucracy that looks like we're going to have to face.
So what I'm hearing so far, just to kind of summarize what I've already kind of learned from before, and I'll be honest, just like most dentists, we've had our eyes just down on teeth and patients for the last few weeks, so it's been harder to keep up. So what I've heard is, we're able to pay ourselves as owners another $5,000 or so of this money. So that's one thing. We're also, if we have highly compensated employees like associates, we're able to pay them significantly more, up to maybe $40,000 or so. Those are things to definitely look at. And then I'm also hearing that there's a potential that maybe some of these loans sounds like the amounts that most dental offices would have probably qualified for could even just be completely forgiven outright without having to deal with, the potential of like crazy audits or having to deal with, not that we have a ton of stuff really we have to prove. That's the good thing about this, is most of us are pretty simplified, but that's nice to know. One question though that I have for you guys is, early on when we talked about this, there was discussion about this money being tax-free, this money being in, whether it was going to be taxed as income, what exactly that would. Now, you guys kind of made the prediction early on that you felt pretty confident that the IRS was going to get its money, that this was essentially going to probably be taxed as income. But, we've heard some discussion about that. Chris, what do you think? Do you still feel the same way that in the end that this, even though maybe the way this was originally described was that it might be tax-free money, that it's still probably going to be taxed essentially like income?
Yes, I do. There's a slogan we use in tax saying, heads the IRS wins, tails the IRS wins. So, yeah, I definitely think that you're going to get the loan forgiven and won't have to pick it up per se as income, but any of the qualified expenses will not be deductible expenses from your income tax liability. So from an accounting standpoint, it essentially makes the loan a taxable capital injection. We've seen a lot of accountants, people say, I'm going to open up a subset of GL accounts that, that cover PPP expenses. And a way to shortcut it, if you just really want to get down to the nut cutting of it, is, just put an item other income, put your PPP proceeds on there and keep on trucking, because you're going to have comparative financials and that kind of thing. So what it's doing is it's essentially taking a non-taxable income stream and essentially making it taxable if you spend it on expenses. It's as broad as it is long.
Gotcha. So I'm that's something that I figured you would say, but it's interesting because I'm still seeing discussion in some of the dental CPA firms, newsletters, things. They're still kind of questioning whether there's a possibility of rule changes or something like that. But it doesn't make sense, like you say, especially if they're going to get more lax on the forgiveness, that it's really going to turn more in that direction with the amount of money that we're talking about. So I think that's great to get that update on PPP. And I think for a lot of people who got the money early, who were significantly concerned about the 8-week period, this extension to having a 24-week period to pay this back is huge. And a lot of dental business owners who were allowed to who got the money earlier and were allowed to open earlier, really that didn't change much for them to open until later. That's a huge windfall for them, right? And I'm sure you've heard. I'm interested to hear. Has that been something that just in your experiences, Justin and Chris, that if we wouldn't have had the extension to 24 weeks, do you think there would have been a lot of dental businesses that would not have been able to use the money that they got? Justin, speak to that. Do you think that extension made all the difference for dental businesses?
I think the extension helped, but I think more importantly, the cliff that Chris mentioned helped the most, because we had a lot of people who ran out and got the money early on against Chris and Justin's advice. If they were listening to the show here on a regular basis, we're like, hey, drag, but they went out because they had to have it, right? And so they ended up sitting on money for 4, 5, 6, 7 weeks. And because of that cliff situation, it was going to basically be a 1% loan. But because of the cliff situation and the 24 weeks working together in tandem, it's going to work in their favor to where now they're going to be able to pull in that data points from this point forward.
What about full-time employees? I just want to cover maybe that one last point on PPP, because originally the discussion was, and you guys clarify this because I may get the details wrong, but originally the understanding that I think we were given was you needed to have all of your employees rehired by I think it was the end of June, in order to be able to qualify for full loan forgiveness. And then if you say had a hygienist that didn't want to come back and you couldn't find a replacement and you got to the end of forgiveness, that you would now have fewer full-time employees and your forgiveness amount would be decreased by the percentage essentially. And Chris, speak to that a little bit. Has that changed? Because we've been hearing that that's changed, that they're really not making it as big of a deal that you have the same number of full-time employees that you started with.
Yeah, and Justin spoke to this. Right now you can have exemptions they still have the FTE requirement, but you have your opportunity for the 8-week look back, and use June 30th, or you have the 24-week look back and December 31st is your date that you have to measure the full-time equivalents. They'd moved it past to December 31st, primarily based on the restaurant businesses, because they're not opening up as fast as people thought they may have. So they're given the opportunity to get that FTE requirement by then, but they've given a whole slew of ways out of that now. They have, if you've given a good faith, written offer to rehire, in a good faith offer to give the same amount of hours, and then if people quit, don't come back, or resign, then they're not held against your FTE requirement. I think the writing on the wall with this right here is, especially in dental. I mean, here's the biggest challenge that I'm running into with operations right now. I've got, the Wes Mullins and the John Rogers of the world going out and knocking down Fridays and, gripping and ripping. And the hygienist that didn't come back, good luck finding another hygienist right now. Good luck finding other assistants in the hiring pool. And that's due to, and I think that the Congress SBA is seeing that this enhanced unemployment has made it real easy for people to not come back. And so the hiring pool, we do hiring on a full-time basis as well for clientele. Good luck finding hygiene. I mean, it's not there. I've got hygienists sending me their resumes wanting to be front office, and they want to start back in August, So I think that they're seeing that, some that probably affected the opportunity in the hiring pool in terms of that enhanced unemployment is one of the reasons that I think they're giving a lot more latitude with this.
So come July 31st, when that enhanced unemployment ends, that's going to be interesting to see what goes on.
Well, they're talking about extending it possibly, but hopefully they're going to put more criteria on it, right? Because if they extend it for another month, you're going to see that the employment pool would just stay contracted. And I mean, seriously, running dental offices myself and also, assisting all these clientele, good luck finding a fill-in hygienist, a replacement hygienist. You got the hygiene boards out there saying, we're not coming back, et cetera, right or wrong. And it just doesn't have the same pool of talent or even bodies to put back in there to meet that FTE requirement, much less operational. I've got clients that are running expanded hours on skeleton crews and, talk about how that's going, right?
Yeah, and if I may continue with what Chris was saying, just get a little technical here, okay? So here's where that FTE kind of falls off. If you look at the Form 3508EZ, on the very first page, it has 3 ORs, okay? So here's what allows you to file the easy application. The first one is if you didn't have any employee salary. So in a dentist that's out there working as a 1099 subcontractor, go ahead and file an EZ form. Most people are going to fall here. You did not reduce annual salary, hourly wages for any employee more than 25%, and did not reduce the number of employees or the average paid hours of an employee. So they changed the terminology around, totally got away from the ACA or the FTE language. They basically said, look, if you were paying 35 hours beforehand and you didn't reduce their salaries by 25% and you did not reduce the hours paid, there you go. So that's going to bring in a lot of the dental practices in that area where you're going to, and then you say, well, Justin, hold on a second. I'm not fully operational during this time period. Well, they give an example here that says, ignore reductions that arose from the inability to rehire individuals, which is what Chris was just talking about, or those who are offered to restore, but the employers refuse. So they give a lot of different back doors to get out of this. And if you read this entire 3508 easy, you're not going to find FTE, full-time employee, pretty much anywhere in here. It's basically going to the hours work. Now, if you go to the long form, you're back on the FTE. But, the majority of the listeners are going to fall in this easy form. They really are.
Okay.
Mm-hmm. Well, this is good update. I mean, it's been a while since we've talked about PPP, and there has been some things that could impact your office. And I hope you're picking up some pearls here. Maybe you can talk to your accountant. If you don't have one, you can speak to Justin or Chris at their places, and they can help you out. And you can find links in the description below. We'll talk about that later. But the next thing is, John, the other day you texted me and you said, dude, EIDL just dropped in my main account, right? And no joke, I was like, I hadn't got mine yet. And I'm like, you start freaking out. And I text Chris, I was like, dude, what should I be looking for? And I'm like searching for SBA and he was like, you checking my email daily? You're checking your email daily? And I'm like, yeah. And I'm like typing in SBA, like it's like a memorized search on your phone, SBA.
Right.
No joke. Right after I text Chris the very next day, it was a Sunday, EIDL gets approved. And I go on there and it has a thing where you can click to complete, the approval, complete
And
verify
we're
the
talking about
transaction.
the EIDL loan, just to be clear.
Yes,
The EIDL grant was early on, right? The EIDL
yes,
loan
not
you're talking
the
about, right?
not the 10 up to 10,000 per employee, right?
Right.
Or $1,000 per employee, right? We're talking
Right.
about actually the loan, okay?
Yeah.
So you go on there and it has a bank account in already. So it's typically your main account that you're using, your operating account. And so one of the things that I immediately did is I called my banker and I said, hey, we need to set up an account for this, right? And so that we can drop it in a separate account from my main operating account. Now, why would you want to do that? Why not just drop it right into your operating account? Why keep it out? How should we be using that? Why was I given that advice? I think that's good to talk about. And then the terms of the loan are amazing, right? Let's talk about the
let's
terms.
unpack that a little bit. Just Justin, why don't you start off here? Talk a little bit about, for those of you who maybe don't know what we're talking about, what is the EIDL loan? How is it different from the EIDL grant that we were first talking about early on? And what are some of the terms and conditions of this as far as how it works? And then we'll get into a little bit more nitty-gritty details with Chris on some of the things we should and shouldn't be using this money for and how the accounting side of it works. But Justin, just give us kind of an intro. What is this? How does it work? And what is it all about?
Sure. EIDL stands for Economic Injury Disaster Loan. It's not a new program. It's been a program of the SBA for years. It came a little different because of the CARES Act. They adjusted some of the provisions of it to be a little bit more friendly. So basically, it's a loan that in this case is a 30-year note. I mean, think about it. It's a mortgage here. You go the first 12 months without principal or interest. The rates is 3.75%. Let me say it again, 3.75%. That's lower than the majority of dental practice equipment loans out there when you're amortizing over 4, 5, 6 years. So you're getting a 30-year note at 3.75%. They will basically give you the funds. They're going to advance you the funds up front. There is some collateral due on this, but if it's less than $250,000, there's not a personal guarantee, but there is a UCC1 blanket encumberment on the practice or on your business. If it's over the value of $25,000, under the value of $250,000, where the technical side comes in is how do you use the proceeds? And that's where Chris will talk to. But just keep this in the back of your head. It is an emergency disaster loan. It's there for working capital. It's not for you to go out and buy a new toy. There's a way you could go about that, but it's not for that. It's there to give you cash to keep your business afloat. So it's there for working capital. It clearly states that in the actual loan document. Now you're going to be required to have a good CPA like Chris's firm over there to keep books and records, and you're going to also be required to have some hazard insurance. But there's some pretty technical rules on how you spend the money. So I'll let Chris walk into that particular area. But it's an economic injury disaster loan.
Yeah, and how I'm recommending clients. I had emails today about what to do about EIDL, and my standard response is get it and hold it. Move it over to a segregated account and just hold it. Just in case we are in a W, instead of a V bounce back, it might be a W where you're going to need more capital and access to cash to keep the business going, or any unforeseen potential, disasters or catastrophes, because, God knows we've had a lot of them in 2020. So it's basically this ambient is what I'm recommending to clients. Initially we thought we might be able to utilize it to restructure some other debt, that less preferred terms. It specifically says you cannot use it to refinance long-term debt. You can't use it to buy new equipment. Really, you can use it for fixed debt, that you already had, fixed debts that you already had prior to, your rents that you had prior to, payroll, accounts payable, the payroll outside of the PPP. So you need to use your PPP first, and then outside of that, you can utilize EIDL for payroll expenses and some other bills. But you can't use it for expansion, equipment purchases, restructure, at least directly. And I think that that term right there, I think that you would want to, as I'm advising all my clients, get the money. Just how the terms are so favorable, and then let's see how a lot of this shakes out. PPP being first, and then let's strategically look at what our options are that we can do, because they're pretty stringent on this idle terms, to the extent that they're saying you can't, at some provisions in the documentation, it says you can't pay bonuses to employees or to owners without the express approval of the SBA. So they're getting pretty, I think they're throwing a lot of money at small business, but they're going to ensure that you use it if you needed it. And if you didn't, then that's where they could come back and claw back. Another provision they're stating is that you have to maintain business records 5 years prior to getting idle and up to 3 years after it. So they're opening up their audit window really big on this, because it is a sweet deal and it's cheap money. But I think they're really going to start locking down on it, and I think it's going to be, I say get it, hold it in case you absolutely need it, and if not, then we can turn around and pay it back. A, or B, there might be some other strategic methods that we could utilize with those funds.
So I guess what you need to be thinking about here is, if you got this money and it dropped into your account like it did on mine, like, whoa, all of a sudden one day, and it was like, oh, sweet, I'm going to go buy a car or something. Obviously that's a bad idea, and that's not what this is for, because it sounds like SBA is not joking around here with audit, and they want to make sure that this makes sense. Plus there's collateralization for a lot of this. So I think that the question is, if we get into the next level of this, okay, so let's assume, for the sake of discussion and knock on wood or pray or however you want to handle it here, that there's not another shutdown as case counts go up, right? I know. I had to put out what everyone's thinking it. So let's just say it. But let's hope there's not. And if there's, because that would be a place that money could come in very useful, because it's directly designed to pay for operating expenses and things like that. So assuming that doesn't happen and we just keep on trucking along here, and that money's sitting there, there's no payments required for a year. So you're hanging out with this money. Now, let's say that you did want to make use of that money. Obviously, we know we can't refinance debt with this directly, but we do know that there are ways to say, okay, if you've got an operating expense, you can potentially use this. So, if you could say use your existing funds that you already have to refinance debt, you could use this money potentially to pay operating expenses. And so there are ways, I guess, that depending on how your advisors advise you, that we could make this money work for us if we needed to do things involving expansion or capital expenses, as long as it's involving, the things that the money was meant for. I mean, are there some ways that you guys are thinking long-term that this could be useful, or do you think this is going to be something where you're going to be saying to people, just pay this back once we're kind of through the economic downturn? Justin, what do you say to that?
I think it depends, John. I think it depends on each individual situation. You have some dentists out there who just bought a practice in January. Think about that. They're in a world of hurt right now. We're going to be telling them, yes, let's use this money. Let's use it properly. Let's use it to market. Let's use it to build your practice up, making your practice yours. You also have the dentist who likes a shiny object syndrome, which we've seen all over. They had to go and buy new toys on a regular basis, right? They're broke, and they just got smacked in the teeth during this time period. We're going to be using this money differently than maybe somebody who is well prepared. Listen to Chris Mahan of Mahan and Associates say, hey, this is how you need to go about it. They were listening to that, and they were prepared. They're going to be in a different world. I think that it's too early. It's too early at this particular time, and there's not enough guidance right now. If we saw what's happened with the PPP, we don't know yet, as of today, what's going to happen with the EIDL. So I think it's too early to start trying to finagle, and this is coming from a guy who loves to plan and throw mud against the wall. You know me about that. I love to try to come up with ideas. I still think it's just too early. We have too much at risk, and our businesses are too tepid. Our businesses are too volatile right now for us to try to play the what-if games. Yeah, there may be what-ifs that come out of this, John, but as of today, when we're recording this in June, and we still don't know, as Chris mentioned, if it's going to be a W, if it's going to be a V. We don't know where. I think you just got to sit back and play it safe. Cash is king right now. Playing it safe is an unbelievable offense sometimes, and I think that's your best offense at this point.
Let me ask you guys a totally different, kind of off the wall question here, which I know you're not prepared for, but I think you'll be just fine. what's going on in the practice sales world right now? Because right now is an interesting time. You had the ADA survey. Everybody's smiling because it's like, oh man. You had the ADA survey come out a month ago where this was during the shutdown. They said it was essentially the equivalent of 15% of practices said they were going to shut down, for like either declare bankruptcy or retire or sell. And then you have some places that still, barely are reopening, highly restricted, and other places are just going like crazy. So what is the environment right now? If you are looking to get out or if you're looking to get in to ownership, what are you guys seeing out there? Let me start with you, Chris. What are you seeing? And then Justin, I want to hear from you. What do you think about that? What should people be thinking about? What are you guys seeing?
I'm seeing a lot of deals that just got hung up due to PPP funds. And, especially now that, we have the 12/31 extension date to utilize it. So I'm seeing, I spoke to a CPA out of Houston that we're working on a deal together. And he's like, man, I've got 11 deals that just hit the hold pattern until 1/1. So I'm seeing a lot of these deals that were going to happen in Q2, Q3, Q4 of 20 just got punted to January 1st due to the 12/31 FTE requirement and all the PPP funds. Because think about it this way. You're selling a practice and you're doing, $1.2 million a year and, you've got, I don't know, $300,000 in payroll and you just got PPP funds you just got essentially free money. And now you're saying, hey, man, I can kind of stack that, redeploy it into the practice, do some different things. So it's changed dates. It's changed allocations. It's changed pricing. It's definitely, in my experience, interrupted the transition world. And there are workarounds, but it takes two like open minds to make those workarounds happen. I haven't seen a big impact on practice values. I think that at least I've seen those pretty much stabilize, if not potentially going up. But the PPP funding and those funds coming in and with the criteria established with look backs and FTEs and utilizing the money has kind of thrown a curveball that just takes another level of due diligence to make it happen.
Justin,
what are you seeing?
So I don't know if you guys know this, but I'm an instructor at the Exit Planning Institute, one of the faculty members there, and we just did a state of the market analysis for small business owners nationally. And what we're looking at is a lot of what Chris said. I would say compression of sales. Valuations are holding firm for the most part as of today on a national level. Now, I'm not specifically talking about dentists. I'm talking about small businesses as a whole here, okay? Because I think you can apply the trends from the national levels of small business to directly down to dental offices. But I think you're going to see a compression. You're held up. You're not going to be able to get financing between now and the end of the year. The banks don't even know how to account for this. I have heard of a couple of practices where the owner is financing. I would never advise that for an owner, but they are carrying the full paper of that particular transaction. Wow. That's what Chris was alluding to on like-minded individuals there during this time period. But what we're seeing on a global macroeconomic level is a compression, not this year, but you're going to have individuals who are ready to retire this year, next year, year after, who now are going to be pushed out about another 2 years or so. And you're going to have a huge supply demand that comes about. And what's going to ultimately drive it, in my opinion, sitting here looking at my crystal ball, which is broken, looking at the crystal ball going forward, is going to be capital. It's going to be money. Right now, we have interest rates at 0. The Treasury said they don't think they're going to go negative. Who knows what that means? That could be the first time in history that happens. But the Treasury rate is pretty much at 0. So if we hold interest rates low, and the Treasury Secretary and the Federal Reserve said last week they're not even thinking about raising interest rates right now. So you could be sitting in a position 2 or 3 years from now to where you have a huge supply and demand simultaneously, which at that point would cause valuations to skyrocket even further. So money's got to come to play. I just don't see it happening right now. My advice would be is if you have somebody who wants to buy a practice right now is a time to self-promote. Now is the time to isolate yourself from your competition. Now is the time to find that location, and it's bombarded with letters, with social media. Find those 3 or 4 practices that you have your eyes on and become that squeaky wheel, because you're going to have not only the current potential buyers, but also this influx of students who are now going to want to buy, and perhaps, maybe not, but perhaps a nice exodus. So if you want to buy in the next 2 or 3 years, now's the time to start preparing yourself for that.
Wow. Man,
that's
John, we talked,
and
you and I talked about this. Yeah.
Yeah.
At the beginning of COVID, we said, and Chris, you remember this. We said, is this the time to look at other practices? Because we saw it immediately. Practices went up for sale. And I just wonder what in the world is going to happen here, because it sounds like to me, Justin and Chris, taking the conservative approach right now for this next 6 months, stacking cash, laying low, not making any aggressive moves. It just seems like that's kind of like what I'm getting from both of you, is just kind of lay back just a little bit. Chris is saying hold idle. Don't use it unless we really need to. And Justin, you're saying just wait just a minute. Like, let's think about it before we move. I kind of get that. I'm kind of getting that vibe from you guys. Is that accurate?
The only thing I would say to be very, very quick in is to reach out to your tax planner ASAP. Get a hold. If you're not working with an unbelievable tax planning advisory team, now is the time. Guys, we have a train going to hit us small business owners. And if you're going to wait till October, November, December to call Chris Mahan and Mahan Associates, good luck getting through, because he's going to be working with 600 plus dentists, likewise here at our firm during that time period. Now is the time. Don't wait till Q4 of this year. You will get hit with this tax train. So if you want to hear one urgency in my voice, and Chris probably won't have the same urgency, but he believes this, and that is now is a time to do your planning. Don't wait. Now's the
good
time.
Advice.
Yeah.
Definitely.
Go ahead, Chris. Go ahead.
I'll echo that statement with that. Yeah, this year is a year that with the appropriate tax planning, you can lay out a different runway for the next 5 years if you play the tax code the right way. You use your money the smart way. If you got to use your cash to do other things, and you may supplement that with idle just for a 12 or 18-month period, that's the advanced strategy that we're talking about you want to get with your advisors, because you can have a totally different runway than you would otherwise. This, and I think we stated it on the first podcast. You asked us, what is this? I said, this is opportunity, right? And these opportunities are going to keep on popping up. You've talked about practice acquisition. I know 4 or 5 practices just in the Nashville area that just shut down. I'm like, let's call them and put our flag there, right? For $20,000. So I mean, there's just opportunities abound, and I think if you do it the right way, you can really set a different trajectory. This is a once in a lifetime event that's been, that's had terrible consequences on, a lot of lives and businesses, but that has the inverse reaction. For every action, there's an equal and opposite reaction. And there's going to be a comeback, and those who plan for that comeback, as Justin said, can really set up a whole different trajectory for the next 5 to 10 years.
Man.
Yep.
Yeah, there were more millionaires created. Hey, guys, there are more millionaires created in the Great Depression than any other time in history. And we very possibly could rival that with this particular season.
Wow.
That's
encouraging.
It's quite a statement. I think in all of
the reason why I say here, I'll defend it. The reason why I say that is how many entrepreneurial minds do we have out there? In the Great Depressionary times, you were used to go and work at a factory. For the first time ever, entrepreneurialism is cool. I mean, it's like hip to be an entrepreneur, right? And now we have low rates. I mean, they didn't have that back then. We have free money coming from the government, and you have people who are wanting to cash out because of the baby boomer demographics. I'm telling you, if you play this thing right, get unbelievable advisors, get some unbelievable tax planning this year, you could rock it out and change your family's heritage during this time period.
Oh, my.
Whoa. That's big. I think that I think we need to hear that right now. That's a mic drop. Exactly. Justin's done. But I think we need to hear that right now because, 6-8 weeks ago, all we were talking about was the what if scenarios. And, I'll tell you, we won't even get into this, but it's just, I've seen, and I think most of our colleagues are seeing patients in the dental business are willing to come back and get dentistry done. They're coming back. If you play your cards right, you do it right, you have the right stuff, you have the right gear, you take the right precautions. So it's not a matter of really so much of the worry we had about dentistry. It's more a question of, are you willing to stay disciplined and have the right people help you to guide you through this? Because there's opportunity that we could come out of this with could be huge, and certainly could pave the way toward kind of how you end your career, even if you're starting out right now. This is the opportunity that could really get you ahead or set you behind, if you don't play your cards right. So of course we want to make sure we let everybody know where they can get a hold of you guys. So Chris, where can people find you? Tell us just briefly a little bit about what your firm does and where people can find out about you guys, and we'll talk to Justin on the same.
Sure. You can find us at www.mayhanassociates.com. And we're a full-service business platform and services for our clients, where we help do financials and look-back measurements to build efficiencies and profit margins. We help clients with practice management and increase their top of the line, their production and productivity. And the biggest part is turning the tax code into your wealth accumulation vehicle. So how much you can gross, how much we can maintain, and then how much we can save in taxes is the name of our game. And we've had the opportunity to help clients for 30 years, and working with clients like you and partners like Justin has really empowered us to do a lot of great things, and looking forward to doing it moving forward.
Justin.
Sure. So you can check us out at Financially Simple. That's our education portal. We give away about 99.99% of the information we have in our heads. And if we knew the other 0.1, we would give it away. We also have Heritage Investors and Heritage Business Advisors, two companies that are sister companies. Basically, what we do is we try to teach business owners how to double their net worth every 3 to 5 years. We do that through using comprehensive or holistic financial planning, along with holistic value growth business planning. I firmly believe that our largest asset oftentimes is our business. And if we know how to grow the value of our business using techniques that Chris often preaches, that we're working with unbelievable CPAs and attorneys to grow that value, then you can double your net worth every 3 to 5 years. So check us out at financiallysimple.com. Hey, Chris, I often heard someone say that if I say www, I'm showing my age. So I can't say www.financiallysimple anymore. I got to say financiallysimple.com, man, even though I say it on a regular basis. So
yeah, love it. Well, if you like what you heard today, you can go over to www.thedentalguys.net and check us out too. I was there when the internet was just brand new. I'm feeling old. But make sure you check us out. If you liked what you heard today, give us some love, like, share, and subscribe to our YouTube channel. Make sure you're following us on Facebook and Twitter and Instagram. We're going to continue to try to bring you this kind of high-quality content from high-quality people like Justin and Chris. We know that this is added value. We've heard from lots of people that as they followed this type of advice that they've been hearing, it's made a big difference for them in their practice. We hope that this really adds some value. And if you're watching this live, stick with us, because in just a little while, we're going to be doing another episode on amalgam separators, which if you haven't yet bought your amalgam separator, you're going to want to listen to this episode, because in just a few weeks, the APA final rule on amalgam separators becomes permanent, and you got to have one. So thanks a lot for joining us this evening for this live stream of the Dental Guys. For Chris, Justin, and Wes, I'm John, and we are the Dental Guys.